From FS Securities, a stockbroking firm on the Gold Coast in Queensland, Australia. And every Monday morning I go through what happened globally around the world and try to forecast what we may see these coming weeks. I'll show you what investors and traders should do to actually hopefully make money on our stock market and overseas. I'll show you what is hot and what is not, and what you should hold and what you should fold. So enjoy the presentation, and if you enjoy it, please give us some feedback. We would really appreciate that. First of all, let me give you the overnight data. Overnight and from around the globe, if you see the Dow was down 603 points on Saturday morning, that is 2.1% to 28,256. This is actually the biggest drop in nearly 5 months. The S&P 500 was down 1.8 and the Nasdaq was down 1.6. In London, the FTSE 100 index was down 1.3%, and in Germany the DAX was down 1.3% as well. The Nikkei was up 1%, and in China the Shanghai index was down 3.1%. And gold was trading around 1,590 US per ounce. The Australian dollar would give you 66.9 US cents, 60.3 euro cents, and 50.7 British pence, and I believe is about 1.3 New Zealand dollars. Okay, now from let's have a look at the full week, and from around the globe we can see that the Dow, which makes up the top 30 US stocks, had a weekly fall of 2.5%, 734 points. However, when you look at the last 2 weeks combined, you can see that the market was down by 3.7%. I would say that's probably the worst fortnight for the Dow in many months. And you look at the Nasdaq, 2.5% over 2 weeks, 1.8 last week, and 2.6% over the last 2 weeks. And the S&P 500, that this broader index, down 3.1% over the last 2 weeks. The Australian dollar was down 2.6% over the last 2 weeks, most of it during last week. The euro was up, and the British pound was down 1.5% over the last 2 weeks. Coming back to gold over the last 2 weeks was up by 2.2%, nearly 34 US dollars, that's US per ounce. Silver, on the other hand, was down 0.2% over the last 2 weeks. However, you can see that the market was down nearly 1% last week, but much lower the 2 weeks combined, which tells us straight away that the week before silver was up. Light crude oil, that's the West Texas crude oil, was down 12.3%, $7.20 US per barrel over the last 2 weeks. And if you're interested in soybeans, because that's really what it means for China to buy from the US, soybean was down 6.1% over the last 2 weeks. Remember, China was closed last week, and because of the problem with the coronavirus, probably no one is buying anything at the moment. Okay, if you look at our market over the last 2 weeks, our market was actually down by 0.7%. However, again, you see last week was down 1%. The week before was positive, but you put the 2 weeks together and you end up with 0.7% last week. Of course, the market is most likely will open more than 1% down this morning when the market opens because of what happened overseas. Our market gauge, that is the 200, the ASX 200, is made up to a greater extent by the financial and the material sectors. When both sectors are up or down strongly, the market reacts accordingly. Last week, the financial sector was down 0.1%, but was up 0.4% over the last 2 weeks. The material sectors were down over the last 2 weeks, 3.1% over the last 2 weeks, mainly by the 3% drop last week. It straight away tells us that the week before was slightly positive. Okay, now on our top stocks, you can see that we've had a few bullish, that is Bramble was up 3.3%. However, don't forget, over the last 2 weeks, Bramble was up 22%. This is where it's important. If you look at 1 week, you say, oh wow, Bramble up 3%, it must be very bullish. However, when you combine the 2 weeks together, you realize that was only a small recovery from what happened over the last 2 weeks. CIMIC, the Altlater Holdings, even though it was up 1.4% last week, it was down 17% over the last 2 weeks. Very bearish for both Bramble and CIMIC. Interesting that both of these companies are involved in constructions. So the construction is not really going very well. AMP was down 5.4% over the last 2 weeks, mainly by 2% last week, and further drop the week before. Going down the line, also Suncorp was down 4.7%, and RIA was down 6.2%, and BHP was down nearly 3%. So you can see the materials and constructions, the materials and construction that will probably come under the industrial. The industrial was down 3.2% over the last 2 weeks. So look at the sector. Which sector has done well? Healthcare. Healthcare has done well over the last 2 weeks. And information technology did very well last 2 weeks. And then going down the line, consumer staples, 1.3%. And you can see straight away what's happening. Consumer staples, you've got Woolworths up 7% over the last 2 weeks. 2.5% last week, and further rise the week before. But all that will evaporate this week. Wesfarmers was up also 2.2%. So looking at the sectors and the companies that are within the sectors can help you to determine the trend for each of those. The next one I want to show you is volume. You can see the volume last two days. This is daily, and the volume of the last 2 days were higher. However, the market was down. 35% of all the stocks were actually in declines versus 21%. That's on Thursday. And on Friday, we've had 31.5% advances and 24% declines. However, you can see following the decline the day before, maybe people thought, oh well, this is actually the coronavirus problems, and then the market said, oh well, you know, the problem will be fixed, and then started to buy. The market on Friday was only up by 9 points, not a great deal. However, the buyers were back in the market, and of course those buyers would pay the price today because the market will open much lower. Now if you look at the advances or declines over the last 2 weeks, this is actually better to give us a better perspective. You can see 4 weeks ago we had very 2 weeks, and this is the time when the market reached all-time high. The week before last, the advance and declines were almost equal, but last week from Monday to Friday, overall the advances were much lower than the declines. So it was actually a bad week. Now if you look at our mechanical system, that is our system that we have designed over the last 15 years, based on technical analysis that include 8 indicators across 2 time frames. Through them we are able to create strategies for the investor, for the conservative trader, aggressive trader, and very aggressive trader. Different strategies and different indicators telling us the long term versus the very short term, and most of our clients fit into the conservative to aggressive traders. And you can see here, after 4 weeks of rising in the American market, overall when we looked at the indicator on Saturday, obviously the indicators turned bearish, and you can see the Dow turned neutral for the investor, the long-term investor, and turn bearish for the aggressive and the very aggressive trader, and for the same thing with the Nasdaq and the S&P 500. Of course, the influence because of what happened overnight on Friday night, Saturday morning. Gold went very bullish 5 weeks ago, profit taking into a bearish section, neutral, and of course because of what happened on Friday and Thursday when the price of gold went up, of course the gold turned bullish across all type of investors and traders. Crude oil remains very bearish. Well, obviously after 10% drop in the market price, you expect to go bearish. We started to see the bearish indicators for the very aggressive traders about 4 weeks ago, or actually 4 Saturdays ago, 3 Saturdays ago, 2 Saturdays ago, and last Saturday. You can see that you can combine the various strategies we've actually been portraying over several weeks. Of course, every week the indicators can change based on leading and lagging indicators. The Australian dollar turned very bearish on Saturday morning, but we started to see the bearish signs 4 Saturdays ago, 3 Saturdays ago, 2 Saturdays ago, and last Saturday it turned very strongly bearish. Again, you can see all these indicators. We put them on the market report in our on our website, and if you're welcome to actually subscribe for 15 days free trial if you want to. Okay, looking at the Dow Jones, that's a very strong bearish candles on Friday night, Saturday morning. But if you put the full spectrum, that is the daily and that's the weekly. We've had 2 bad weeks, 2 red candles indicating 2 bearish trends. And the question is, will it hit the 21-week moving average? And if it goes below it, depends what happens tonight. The daily, you can see that it started from a week earlier. The trend started to be bearish. We gained a little bit of momentum, and of course we see that the Dow started to be very strongly bearish on Friday. Now, depend very much on how the coronavirus is going to be resolved. Obviously, every day we see more deaths around the world and more contagions. So that means, of course, the market will be affected because the airlines will stop flying, the travelers will stop coming, the buyers will stop selling, will stop buying, and the sellers obviously will shut shop. So obviously that affect the market. Now, what I see here, what I show you here, is that 2 Saturdays ago we showed you the sectors. We told you the sectors on the market were actually bullish, mainly bullish. And then of course, if that was the case, then we started on Monday with bullish indicators, and then we started to drop from bullish to neutral, and then obviously at the end of the week the indicators started to change. So we like to see what happened on Saturdays, 2 Saturdays ago, and we see how we traded right through last week. And then of course we've got the new indicators from last Saturday based on the indicators which been affected by all the trade last week. But this is actually history, and this is actually the future. And of course next Saturday we'll show you that particular week indicators in here with new indicators next Saturday, and we'll show you how we traded right through from Monday to Friday this coming week. Alright, so it tells us, you know, how valid or reliable those indicators are. Remember, of course, we need to remember that the daily indicators will actually affect the weekly, but sometimes the weekly after another week can give you an overall long-term trend, and then can give you some signals about what you should do on the daily basis. And if you're trading on the daily basis, obviously you are an aggressive or very aggressive trader. This is our ASX 200. You can see here that on Friday the market ended up lower and the whole week was a red candle. But mind you, have a look at this. On Friday the market did not close at the very lowest point of the week, because we recovered at the end of the week, but not enough to take it back up to a green candle. And you can see here that's 245. On Monday the market opened low and finished low, gave up all the gain during the day, and then on Tuesday the market was down, recovered a bit on Wednesday, on Thursday was down, and on Friday was slightly up. But look at the trend, and if you look at the indicators, the parabolic stop and reverse started to be bearish on Tuesday, and you can combine that with the stochastic, and the stochastic starting to be bearish also 4 days ago. So you don't have to wait to what happened following the indicators. The indicators will help you to determine the market. However, when you remember the weekly of course at the start of the week, because the weekly indicator does not change until the end of the week. However, at the beginning of the week the previous indicator was bullish. So bullish and daily, then of course the daily is a more leading indicator versus the weekly, because the weekly takes a full week before it changes. So you got to be appreciative of the fact that indicators don't tell you the full story at a particular time. You have to consider the time frame and what is leading and what is lagging. And here we see again the stocks. Again the same situation here. We show you the weekly, and then we show you what happened during the day after we gave you this 2 Saturdays ago. And of course on Saturday we've done this for you, and hopefully today and the next few days, hopefully what we recommended based on the indicators on the weekly chart. And remember, the weekly chart does not always give you the information immediately, so it takes some time for the weekly candles to change. However, based on what happened 2 Saturdays ago and what happened during the week, you can start to see how reliable those indicators are. Of course, we don't tell you that indicators is sacrosanct and will give you 100% of the results 100% of the time. So you got to be intelligent and aware of what's going on. We started with mainly bullish. CBA was bearish in the market on 2 Saturdays ago, and you look here and you see that CBA turned very bullish on Monday, so against the bearish indicator from 2 Saturdays ago. If you look at mainly bullish, bearish, TCL was bearish, and then TCL again turned bullish. It was a good week on the start of the week. So again, you cannot take the weekly by itself. You got to take the weekly and the daily combined. That's what our mechanical system is based on. It's the parent and the child. The parent gives permission for the child to trade based on the indicators, and then the parent says to the child, you don't just have to trust me, you have to rely on your own indicators. I gave you permission to trade bullish, bearish or neutral. However, you need to confirm that with the daily chart, and that's so important in our mechanical system. So if you follow the mechanical system, that will help you a great deal. Another thing that we do also, we try to show you the weekly volume change. Companies that had increase in the volume trading, and that's based on the moving average of the volume over 50 weeks and what happened over last week. If last week volume exceeds the 50-week volume, and provided the price has gone up, we want to know why. So you can see here, as a matter of interest, James Hardie last week went up by 0.7%. The previous price was 31.6, went up by 20 cents, not a great deal, but then it had recent volume of 122%. Sonic Healthcare, and remember we told you earlier today in the previous presentation that healthcare was actually one of the good sectors. Well, Sonic Healthcare went up by 1.4%. The price went up by 1.4% and had increase of 4% above the average volume. Not a great deal, but if you look at on the mid cap, and by the way, we do the top 50 bullish and bearish, and nothing on the bearish side came up on the top 50. But on the mid cap, for the more aggressive trader, we've got some bullish companies and bearish companies. Now, if you look at, for instance, data number 3, 237% above its average daily volume, the average daily volume over 50 days, and the price went up by 3.6%. Look at Ramelius Resources, 114% above the volume. That is actually from 13.9 million daily to 15.9 volume on Friday, and the price went up by 8.2%. So it's really worthwhile looking at it. After this is the weekly. I'd like to show you the daily. And remember, the daily and the weekly together confirm the presentation, confirm the trend. Now, down here, if you look at, we're looking for Ramelius, but Ramelius on Friday wasn't really, on the week, yes, on the daily, it did not. So why didn't it continue on Monday to go higher? Well, obviously the price started to drop, or it didn't go as high, and people started to take some profit. And the volume wasn't as high as well, because otherwise it would appear here. But West African Resources went up by nearly 6%, had nearly double the volume. Again, if you want a copy of this, or you want to discuss this with us, all you have to do is talk to us and we'll give you a copy of the chart. So finally, I want to tell you that everything I said today is of general advice only. This is our disclaimer. So before you take any action, please consult with us or talk to the professional advisor if you have one. Otherwise, talk to us. And if you have any questions, all you have to do is talk to us. How do you find us? Well, there we are. You call me on my mobile. I'm available 7 days a week. That's provided I'm not on the tennis court, or I'm playing bridge, or I'm playing backgammon, but I always call you 7 days a week. You can call me up to 10 to 12 hours every day. If you're ringing from overseas, 61 first. You don't need the 0 if you're ringing from overseas. 411 25 9526. 411 25 9526 and 61 for the country code. Or you can write to me, george@fssecurities.com.au. george@fssecurities.com.au, and this is our website, www.fssecurities.com. Finally, I want to wish you a happy trading week, and all you do, be careful, because the market is not always going to guarantee you profit. So be careful.